to give you some of the useful information that will help you make your decisions. Now, our first speakers will be two of our corporate members, who are Adrian Hook and Daniel Henderson from Blevins Franks, which is a specialist wealth management and holistic consultancy that works on pensions and all sorts of other areas, which they will tell you very shortly. If I might invite Adrian and Dan to come up on stage.
Thank you, Christian.
I'm going to give you two microphones.
Oh, right, shoot.
Oh, yes. Here's yours. That's Dan's. There you go.
Good morning, ladies and gentlemen. And how great it is to be back here, and also to be in a room where not many people are wearing masks. Totally understand if you want to wear a mask. But in Portugal at the moment, it's still compulsory in indoor places to wear masks. So it was kind of a surreal experience walking through Heathrow yesterday with nobody wearing masks. It's fantastic to be back in London again, back on the road after a 2-year pause. I myself moved to Portugal in 2007 after first going to Portugal in 2006. So I made a very quick decision, and as that guy said on the video, to make a new start. What I'm going to do today is just take you through a little bit about who Blevins Franks are and what our story is, and then I'm going to hand over to Dan, who's going to give you a couple of case studies and have a look at actually the practicalities. How does moving apply to us in a financial sense? So who we are. What's nice to say is this is what the British press, the prominent British paper, said about us a few years ago. The leading international wealth management advisors to UK nationals living in Europe. We have offices all over Europe, but most predominantly our clients are UK nationals. However, I myself have a Norwegian client, Danish clients, German clients. So sometimes the solutions that apply to UK nationals in Portugal apply to other nationals. Where we have the speciality is to be able to do that cross-border planning for UK nationals. So that's our bread and butter business. But the solutions can sometimes apply to other nationals. So if there's any Irish residents in the audience, for example, the solution still could apply to you. We've been advising clients for over 45 years in 7 different jurisdictions, 25 offices across Europe, a total of 54 partners like Dan and I, and we're ever expanding that. We recently, a few years ago, opened an office up in Cascais in Lisbon as well, and the partner there, Matthew Christman, looks after the north of Portugal and Madeira. We have 200 employees and we look after about 5,000 families. So when I say a family, obviously our demographic of the business is commonly people that come to retire. That's our normal demographic. So actually what happens, I've been working in Portugal now 15 years. So if I took a client that was 65 when I moved, then there's a possibility that that client could pass away. So then I'm looking after their family. So we are a true family office, cross-generational planning. We manage about 3 billion euros under advice. So we're a big player in the market, so that enables us buying power. So some of the wealth managers that we advise with would be Eben de Rothschilds, for example. I'm sure you've heard of Rothschilds and the Russell Group. So where we have that real cross-border speciality, that's where we can be of assistance to you. And not only that, is rather than getting advice from a UK-based advisors, it may be that actually your partners and the advice comes from in-country, that's invaluable. The solution for you may be the same solution for me. So I may well use the same solution that you use. So if there's a legislational change that affects me, it's likely it's going to affect my clients as well. So having boots on the ground is a very, very good asset to have. From a UK perspective, we have a UK office that specialises in advising on the exit from the UK. So when we're leaving the UK, we're making sure that we're doing it correctly, and we're taking advantage of any tax allowances we have in the UK before we move to a different jurisdiction. Said that cross-border expertise. And there's a little bit here about post-Brexit. Brexit obviously became more of a problem for UK nationals wanting to relocate in Europe. For us, it meant legislational issues and compliance issues, but as a company, when Brexit came and went, absolutely seamless. We put a lot of work and research into making sure that our clients could receive advice right the way through that process, so uninterrupted advice. And from Portugal's point of view, of course, they still want expats to move, and they have very good tax incentives to enable us to make that move. So the only thing that's changed really is, rather than going to the local camera and picking up a residencia, you've now just got a few extra hoops to jump through, but the Portuguese haven't made it difficult for us. Because Portugal believes that lower taxes can attract more people. And what do people mean? More, they spend money. So you're going to buy property, you're going to eat in the local restaurants, you're going to fill your food, fill your car in the petrol station. So Portugal may not be wanting to tax certain types of income, but what they will do is they'll collect taxation from indirect taxation, which in turn boosts the economy, creates additional jobs for locals, and increases their overall tax revenues. So the tax benefits come in the form of NHR, non-habitual residency. Don't be fooled by its name. Non-habitual residency, to apply for the tax allowances that NHR offers, you have to be resident. And not only that, if you schedule it correctly, when I came to Portugal, first started working in 2007 and advising people retiring. And of course, we know what happened in 2008, 9, 10, don't need to tell you, Lehman Brothers, Iceland went bust. So all that happened, but actually when you look at the tax planning without NHR in place, it's very attractive. So to retire in Portugal was attractive back then, and it's still just as attractive today. So the post-NHR is very important. So what you can, if you're using a company like Blevins Franks, for example, is dovetail the advice. So what happens during NHR and then post-NHR. There is no gift tax in Portugal. There is no wealth tax in Portugal, unlike Spain and France, for example. And the UK has no wealth tax either, but one thing the UK does have is inheritance tax, and we're all aware of that. But that's a very prickly state of affairs. Just because you've moved to Portugal doesn't mean you're not exempt from IHT. So it's critical that you take advice and make sure that actually your assets can move smoothly and as tax efficiently to your beneficiaries. So after saying all that, one must ask yourself, well, Adrian, that sounds great, but what's the catch? So I'm going to hand over to Dan, who's going to take you through what the catches are.
Thanks, Adrian. Can everybody hear me okay? Fantastic. Okay, Adrian, thanks for that. I'm also a partner in our Algarve office in Portugal, and I'm actually the tallest partner in Blevins Franks. Anyway, so Aid's passed over to me. What's the catch? It actually just surrounds residency. So whilst all those benefits that Aid's highlighted under the non-habitual residency scheme are available, they're only available if you've qualified as a resident in Portugal, which is quite straightforward. So as long as you're there for 6 months in any 12-month rolling period, 183 days, you'll be deemed, or can be deemed, Portuguese tax resident. But what about the long arm of the UK? You have to have escaped UK tax as well, and that's really the catch. A lot of conversations we have are around understanding how many days somebody can spend back in the UK and still be considered UK non-resident. Now, the UK have helped us. In 2013, they introduced a 105-page document called the Statutory Residence Test, which is a fantastic read if you're struggling to sleep. We have simplified it, and we take the journey with our clients and their families so they can understand exactly how many days they can spend back in the UK to achieve non-resident tax status there, and then qualify as tax resident in Portugal. So really, residency is the catch. And precise planning is required, not just on exit from the UK, perhaps in the cross-border space, and then also on entry into Portugal. So if you're going to optimise the tax benefits that Adrian's highlighted, then timing is critical. To help identify and show some of the advantages of Portugal, I'm just doing a brief, the dreaded case study, the originally named Mr. and Mrs. Green. So both in their late 50s, they've got a UK company called Widget Limited. They draw some salary and dividends from that company. They've got some pensions, a main home in the UK, and some UK savings in ISAs and cash as a result of inheritance from the sad passing of Mrs. Green's father's estate. So how does that interact with Portugal? These are their plans. They bought a villa in Portugal and they plan to move in the summer of 2022. Their objectives are to keep the company going and working a couple of days a week remotely from Portugal, which we're seeing more and more. and their plan is to retire in the next 2 to 3 years, yet retain their interest in the company. So let's have a look at some of the planning. NHR and dividends. So A touched on NHR, and if I explain it this way, the basic premise of NHR is that if a tax event, be that income or capital gains, if it's taxed or taxable at source, so quite often we have to look at treaty rules to establish which jurisdiction has the taxing right, whether they tax, then it will be exempt in Portugal, or in the case of pensions, a flat 10%. What does that mean? So, as a UK non-resident, you can claim what's called disregarded income treatment. So you can disregard dividends and interest, and the UK will pay it to you gross. But importantly, they have the taxing right on that dividend, which means when you receive it in Portugal under NHR, it's tax-free. So that's fantastic, straightforward planning, 10 years of tax-free dividend or tax-exempt dividend for Mr. and Mrs. Green. How about pensions? So, they might consider transferring their personal pensions, their non-final salary pensions, to a SIP or to a CUROPS. You might have heard of a CUROPS as a qualifying recognised overseas pension scheme. Why might you consider CUROPS? Several reasons. It might be for currency, so they realise they're spending in euros in Portugal and want to match up their pension in that currency, so there's no currency risk. It might be for tax planning reasons, so they might be close to the lifetime allowance, and a transfer to CUROPS crystallises that event and could cap their lifetime allowance liabilities. It could be from an advisory point of view, so post-Brexit they might find that their UK advisor can no longer advise them as an EU national, so they're not on hand to take them through the pension planning journey. But for many it's actually about extracting what might be a very valuable asset from the UK in the form of their pension fund without any tax. And as we know, the UK has a pretty bad deficit at the moment, and tax rates are likely to go which way? Up is the consensus. And guess who pays it? It'll be the people who've actually got assets that have to pay the tax. So the ability to extract a potentially valuable asset and move it into the jurisdiction in which you're living can be very attractive. Before exiting the UK, regardless of what that pension plan is, we would typically advise that the pension commencement lump sum, the 25%, is taken. Why is that? Because Portugal don't differentiate between income and tax-free cash, so you'd find out you'd pay 10% on the 25% if you defer taking it till you arrive in Portugal. So that's a crucial part of the plan. However, if you have your pension safely ensconced in Portugal, then you benefit from the 10% flat rate of tax for that 10-year period. And depending on personal situations and circumstances, you might then look at the plan. So do you draw down its entirety in that 10-year period? Do you defer? Much depends on the client's situation and family circumstances. What I would say is that pensions in this space are a highly specialised area. So if you are seeking advice, please do so from a regulated firm. And guess what? We happen to be one. In terms of further planning, so looking at the sale of the UK home, we mentioned the ISAs and cash. So ISAs are another key planning area. Before leaving the UK, ISAs should be considered being sold so that you realise the gain as a UK tax resident, tax-free. And in this scenario, we've got a pool of $1 million for investment. And in Portugal, there's also a very tax-effective wrapper that you can use to shelter that capital for investment. It benefits from deferment of tax, so no tax on income and gains, and then after 5 and 8 years, the tax rates reduce very substantially, so it acts as a perfect sort of supplement to pension income. Again, depending on the situation, it might be that the pensions are rolled up into that qualifying investment in Portugal, but again, specific advice would be required at that point in time. What we're finding more and more, NHR was introduced in 2009, so obviously a lot of people now are moving towards the end of their NHR period, and they're coming to us and saying, "Damn, what do we do now?" And the trouble is, post the 10 years, there's not a lot you can do unless you've gone through the right steps of planning during that NHR period. But with the right planning, you can be extremely tax efficient beyond the 10 years. So in summary, some fantastic planning opportunities. The timing, as I've identified, is absolutely critical in that process. Please take advice. We produce an informative e-newsletter on a regular basis, so if you'd like to be updated on relevant aspects and changes in Portugal, please come and see us and we'll add you to the database. We don't bombard you with information, but if there are any useful or relevant changes, we'll let you know. And we also do a book, so if you're not a talker but a reader, you might like to have our Living in Portugal book. We're now on edition 9, so updates all the budgetary changes. Every year we include them in the updates, and as part of the deal with the Portuguese Chamber, as a guest of the event today, you can have a copy with our compliments if you simply come and see us and fill in the book request form. It remains for me to say thank you for joining us this morning, and a thank you to the Portuguese Chamber for giving us the opportunity to present, and I hope you enjoy the rest of your day.